Good morning. Happy Thursday.
Good morning, GT fam.
Oh, man. Well, we got some topics to talk about today.
Yes, we do.
Yeah. But, let's wait for everybody to come on real quick. Get more heads in here. Good morning, Charles.
Morning.
How you doing? Good morning, Jim from the East Coast.
Good morning, Jim.
Yeah, he's like always in here. He's like the first one here. Oh my gosh. Yeah, we got a lot today on the agenda. Just a few things we want to talk about. Maybe if we have more time, react to a few more videos. But yeah, talk about more of that stuff. Lisa got some stuff she wanted to kind of share with everybody as well. Remember those photos you shared with me and Charles last week? Those
Which one?
foundation.
Shoot, I don't remember
Those
which one I shared with.
foundation.
Oh yeah.
Did you ever get anybody out there? Did you
I did.
reach out to the person?
We yelped a couple of people and everything, and the buyer was already so distraught about the situation. He already did his own homework and stuff like that, which is a wonderful thing. They told me exactly what Charles told me as well. They're going to fill in the foundation and whatnot, okay, and try to find out where that issue is coming from.
Okay. Yeah. So we'll talk about that a little bit with you guys too. If you guys ever come across that same issue.
Mm-hmm.
Yeah, I think it's a good topic to talk about as well. Just
Absolutely.
yeah, but other than that, let me just kind of go through our market update real quick just to see how June is doing. So how June is doing this week. Let me just share my screen real quick. Okay. Inventory is going up. Inventory is up 4%. New listing is also up. That's good. 15%. Sold homes are down though. 18%. Pending homes are up almost 10% from last week. Now, month to month, inventory is up 7%. New listings are down 25%. Sold home is also down 25%. But pending homes are up 4%. And looky here, from last year, inventory this year is higher by 38%. So we got more inventory. But new listings are down about almost 10%. Sold home is also down like 22%. Pending homes are up by 12%. So there you go. Okay. More inventory than last year. Let's go to the average price per square foot. Okay, it's up from last week, almost 4%. But it's down month to month, just a tiny bit, 0.6. It is up compared to last year by 3%, though. Average price per square foot. And days on the market. 17 days this week versus 25 days last week. That makes sense. May was a little bit of a slower month because of all the graduation and events. Now this month versus last month, 19 days on average. So this is how fast a home is going off the market. About 19 days, okay? Anything after that, something might be wrong with the home. It's either overpriced, the condition of the home isn't appealing enough, market pretty poor, or something's wrong with it. Okay, 19 days this month versus 23 days last month. Last year, it's almost identical. Last year same time is about 18 days, and this year's 19 days on average. Okay, so it's very quick. Homes are still going off the market very quick. That's like a little bit over 2 weeks. Okay. Oh, what was that? It sounds like something dropped.
Oh, it might have been my watch hitting the table.
Okay, I'm like, oh, something dropped. Someone's in trouble. Active price is down from last week, almost 1%. Sold price is up though from last week, almost 2%. But from last month, sold price is actually down, just a slight, and active price is up just a slight as well by 1%. Now, last year, okay, this is where last week, remember the numbers were down from last year, same time? Well, this week so far, comparing to the same week last year, it's up. So 1%. So this year, this time, it's the average sold price is $626,000. Last year it was 618,000. Okay, so um, remember last week how I was going over the market data, Lisa and Charles, and I was like, if the price keeps going down comparing to last year for like a good couple of months straight, then I think we're heading into more of a buyer's market or a steady market. But I don't think that was the case. Um, my theory why last month was so slow was because of all the holidays that was going on. Mother's Day, graduation day. Um, People got out. Some school districts were already starting their summer breaks, and people were actually taking advantage of the nice weather, and they're making plans, going out, and so they kind of put buying a home on hold. This month, though, is hectic. This month has just been crazy. A lot going on back and forth. So, yeah, it's back up again. Okay. On average, it's up 1% from last year, same time. Okay. Now let's go over to months worth of inventory. Last week, remember how this is also super weird? It was like 4 months.
Mm-hmm.
That so now that we're more towards like the middle of June, this is the inventory. Right now, currently, we have 2.2 months worth of inventory. So more inventory now, which is really good. Compared to last month, we have 1.5, but it's still not enough for the market to shift. Okay. We need this to be a steady 3 months worth of inventory for a good 2 to 3 months, steady, in order for the market to really, really take its turn. And so far, this month is 2.2. We'll see how next month does. Okay. And if you compare this month to last year, same time, last year we had way less inventory. We had like 1 month worth of inventory around this time. So it's basically almost doubled 80% more this year, this time, than last year in 2023. Okay. So, which is good. I mean, buyers are going to have more options to choose from. Um, but remember, if days on the market are super quick, like 19 days, then most likely when this starts going higher, for sure that's like a big indicator that the market is definitely shifting to be more favorable towards a buyer. Okay. And then that's when everything gets flipped. The roles get flipped. Right now, buyers are competing against one another. But in the buyer's market, sellers are competing against one another. Yeah. And this year, especially this year, because it's election year, it's going to be very interesting to see after November what the market's going to look like. How do y'all feel, Charles, Lisa? Got your coffee?
Yeah, I mean, we talked a little bit about this the last time as well, and it's like this year is a little bit of a different year. It's a little bit different because historically, on the election years, the interest rates goes a little bit down so that we can concentrate on voting and things like that too. But this year has been a very, very different year as interest rates continue to rise and whatnot. We just started to get a little bit of headway today. Rates are finally a little bit lower than 7% on average right now. Okay, if you pull up the Mortgage News Daily, Gia, and that just started happening this morning. Okay.
Ooh, it's below
Yeah,
7 now.
sevens, right? And then now it's at 6.98. Okay. So it's looking a little bit more favorable to us. They already said that they're going to keep it steady. Okay. But their version of steady is definitely different from our consumer version of steady, right? And still very volatile. I would highly recommend if you have a favorable term, if you have a favorable monthly payment and whatnot, and you know that, hey, in the worst case situation and I can't refinance, we've seen posts all over social media saying a lot of people are like, hey, they had an ARM, which I find really, really silly because the adjustable rate mortgage does not interest only. So the monthly payment is really not that different. I believe I've already priced it out a few shows ago. It's not as favorable, especially in our area. And when people are doing that and they're not really securing that interest rate, especially in a time that's so volatile, like right now, it makes it a little bit more tougher. So if you are looking to purchase a home, make sure that in the event that it's not favorable for you to refinance. And when I say not favorable, I mean, it doesn't make financial sense. It's not saving you money. And even if it's saving you $50 to $100, and if you've already had that loan for 3 to 5 years, you have to consider you're restarting that loan again. If you are restarting at 30-year, that you're foregoing the 3 years you've already paid into it. Okay. So definitely take a look at all of that and reconsider. I was like, okay, if I cannot refinance, or if it's not financially favorable for me to refinance, are the payments still okay for me? And if the answer is yes, then absolutely, real estate is a long-term game. Okay. And I would, take a look at your options in getting you into a home that's a lot more affordable.
Yeah, I mean, Lisa, regarding the adjustable rates, I think a lot of investors are using those loans right now.
They are because
because you said that you're seeing a lot of those in the market right now, right? There are probably more investors, right?
I'm not seeing a lot of them on my side per se, Chia, just because, again, when I price it out for my people and because it's not an interest only type of loan, okay, when it's interest only, sure, because the payments are a lot more favorable. You get more of a cash flow as an investor, sure, especially in the Bay Area where a quarter point, half a point makes a huge difference, okay? For us, not as much so far. So in that situation, they can either choose a 3, 5, 7, sometimes 10 years adjustable rate mortgage, and they're waiting for interest rates to go down and refinance at that time. That absolutely makes sense. Again, it is a risk when you're not locking it in, especially during this time. If you are living in your house and you know that it's going to be a long-term situation for you, I wouldn't recommend it. There's a lot of first-time buyers that have used that adjustable rate mortgage, and I feel more that when the consumer is unknowing of the differences, like say for instance, Chia, I've come across a couple of situations where the client's like, oh no, I'm getting a especially when we had that buy down rate, right? It's kind of like an adjustable rate mortgage because it goes up every single year, right?
3 years, yeah.
Correct. So when people are looking at in that sense, and they're like, okay, I'll just wait until it gets a little bit better and whatnot. Okay. And when it doesn't get better, because rates have been going up high in the last 3 years. So people who got their mortgage 3 years ago, 2 years ago, a year ago, it's not favorable at all to refinance during this time. I don't recommend it. And, I mean, as an investor, if you're looking to cash flow and everything, that is a short-term gain. Right now, I don't think real estate is going to be the ones that are profiting in a short term is very far and few.
Yeah, it's you would have to really, really like be lucky. And when I say lucky, you're basically gambling on the market appreciation.
Correct.
So I think what I'm seeing is investors that do end up using the adjustable rates in this market, they're just kind of using it to purchase it and hold it so they could do like a quick renovation touch up on the home and then they flip it,
Yeah.
you know, because they're
Right.
just they probably got it for a little bit of a discount off of the market or off market and then just, do very minimum updating and then put it back on the market because I think because inflation and everything is so high still, I feel like a lot of flips nowadays are so minimum. Like it's literally an investor will buy a home and clean it up, and if they could salvage whatever's left, they would do it. Like if the floors still are decent, they're just clean it up. Uh, don't even do like a full house paint, just touch up, and probably don't even renovate the kitchen. Just maybe paint the cabinets and add new accessories, and then stage it, and then boom, put it on the market. So that's what I'm seeing a lot.
Right. Right. And the funny thing is, I actually came across on two of my buyers. One of us is a flip situation, right? And in the beginning of the year, that flip didn't profit at all. They want to push the sales price a little bit more, and realistically, that investor had to just take a loss, try to minimize the loss as much as possible. And it was really lipstick slapped on a pig kind of situation where when my buyers got the appraisal done and everything like that, they still had dry rot. They still have chipping paint. This was supposed to be a flip, and it was like the most basic flip
I know.
possible, and they did lose money off of that.
I know sometimes Charles will go into like a home inspection of like a cookie cutter flip, and Charles will be like, "This is the ugliest flip I've ever seen. Like everything is just covered up with paint." But right, Charles, you see that a lot, huh?
Definitely. I've seen some really nice ones though recently.
Mm-hmm.
But it's always the attic, it's always the crawl space that gets neglected. Like no one ever touches that because they figure, well, let's just slap this lipstick on this pig real quick and then get it out of here. But it's just, I feel like it's just kind of the way it goes.
Right. I mean, it's far and few, but I mean, we're in a transaction right now too, and it's a flipping situation as well. The investor bought it for 174,000, selling it for 364, but they did an immaculate job. Really, really, really good craftsmanship and everything like that. That absolutely is worth it. Again, it's very far and few. I haven't seen any of these in quite some time.
Since we're on the topic of flips and cookie cutters and repairs, let me show everybody this before we continue on with the topics. Let me just do something real quick. Okay, Lisa, you sent us this last week. Remember me and Charles?
Yeah, to gain some insight from Charles to see what we can do to help our people and whatnot. And this wasn't found out until he purchased the home about a year after. And it all started from a funky smell in the kitchen cabinet. And after he got it inspected, it looked like there was some sort of mold, which usually is because of water damage. Okay. And once they pulled that out, it was a can of worms. They did the kitchen, and then they pulled up everything in the entire house. So he's getting this fixed, thank God. It was actually a lot less costly than I expected, and which is a wonderful, wonderful thing. Okay. I've seen some foundation issues, especially in the Bay Area. I had a client purchasing a house for 1.8 million. and it was completely gut job. It was 1 bedroom, 1 bathroom in Palo Alto, you guys. So that home is actually worth $4 million right now. So I guess
This one?
no, not this one. This one is actually here in Sacramento.
Oh, okay.
This is a different situation. That foundation cost, I was just comparing the prices.
Oh, yeah.
That cost for my clients then was actually about $200,000. This one is roughly about 25,000.
Okay.
And so this is one of those things where you never want happening. He was in really, really good spirits, and I'm really glad for that he was still positive and everything. I mean, this is going to be a long-term gain anyway. Okay, so looking to fix that up and get all of that foundation fixed and everything. And this typically happened because Charles, I'm sure you can elaborate a little bit more on this. I didn't know, as a loan officer, this is not something that I usually see and whatnot. This is not something that inspectors usually tear up the carpet, because this was a carpet tear up in order to see all of this.
Mm-hmm.
Yeah,
So,
I mean,
so Charles,
every now and then, if I suspect something, because you start messing with the carpet and then it's not stretched anymore, and then you get really upset, sellers and all that. But every now and then, especially if the carpet's already kind of loose already, and especially if they have it in a bathroom that's right next to a shower or something like that, I might pull up a little bit of the corner just to look. It's really not. It's not within any scope of any inspector. Any home inspector to do that, because you're basically doing destructive inspection. You're opening something up without permission and whatnot. But honestly, I really want to make sure that I'm getting as much information as I can for my clients. And so if I see some standing at that carpet and it's already kind of loose already anyway, I'll pull up the corner just a little bit so I can check, especially if it's a subfloor, and I'll pull it up a little bit so I can look and see, and I'll make sure the wood's not rotted and put the carpet back down. It's not going to loosen it up that much at that point, because it's already kind of loose as it is. But people putting carpet in bathrooms is already just a crazy situation anyway. But
they used to build them like that a lot, to where there's
it
carpet
was an
in
old
the
school
bathroom.
thing.
Yeah.
Yeah.
Let me ask you this, Charles, just in case Chi-Chi fans in them are wondering. This is not duct tape.
No, that's like a
What is
sealant
this?
or mastic. It looks like some kind of a sealant or mastic that they put over the floor to try to seal the cracks.
Okay, so they're using it to seal up the cracks.
I don't think they just. It doesn't look like it's just paint. It looks like some kind of sealant or mastic that they use to try to put over. And I can see that they put some in some of the areas, but these larger cracks, I'm assuming they're going to put a much thicker sealant or cement to cover that. And then if they just seal it and fill the crack, then they might go over the entire floor with a waterproofing membrane, if that's what they're looking to do.
So I noticed that they only did it between cracks like this, and there's like a line going through each of them. Are these kind of like staples?
I don't know what that is. It looks like it was a more cracking. It doesn't look like they cut into it or did anything like that. I'm not really sure what that is. I haven't seen that before.
Okay, because my logical mindset's kicking in, and it's like, oh yeah, the foundation's cracking, separating, so you need to staple it to hold it together, and then you seal it, right?
Makes sense, yeah.
I mean, if they were going to do something like that with some kind of a securing type of, some kind of securing, fastener or hardware or something, I feel like the holes would be larger than that. But I've never seen whatever they've done here. So I'm not sure what this is. I don't know what the purpose of putting these horizontal lines across this vertical line in here is. I'm not sure what that was for.
Okay, now what is this? Here, let me just share this. What was this? I think Lisa sent it over too. I think it was for the same house.
I think it was part of the same situation, but I think that they were trying to dig down to figure out how low the moisture issue is.
For the foundation, for the structure.
Yeah, I think so.
Okay. I thought they were digging so deep that dirt started coming out.
And they might have even started to plan for that French drain that they're probably going to end up doing. That might have been what they started with, because it looks kind of like a trench. So they might have started digging for that.
Okay. Okay.
Yeah.
Got it. All right. Now, next topic. Okay, this is what everybody has been reaching out to me for, because there's been so many people promoting this. Right here, Lisa, this is gonna be you sharing your thoughts.
So if you're gonna scroll down, take a look at this. We do broker to UWM. Okay, there is this program. I'm going to show you what that's going to look like and what you need to qualify particularly for this. So if you scroll down, I believe there's a link that says for more additional information, click here. Go ahead and click there so the public can see, truly what this program is about. Okay.
Yeah, so let me just read it as if a consumer is reading it. Okay,
Yes.
first.
Yeah.
You're clicking on the link because you see this, right? You're like, oh my God, 0% down? I've been trying to save my whole life just for the down payment, and now it's 0% required? Heck yeah, let's find out more info. You click on it, it's like, okay, the UWM mortgage lender announced today that the large broker event of the year 0% down payment program aimed to help more borrowers become homeowners without upfront down payment. Keywords upfront.
Mm-hmm.
This exclusive program allows qualified borrowers to receive a 3% down payment assistance loan. What does loan mean? 3% loan up to $15,000 for UWM. This loan will not accrue interest, will not require a monthly payment. Okay. So keep going down. 0% down payment program is going to change the game. I love it. It's a game changer. No other wholesaler lender in the country is offering this, meaning independent mortgage brokers now have a significant advantage with consumers and real estate agents. Thousands of borrowers are sitting on the sidelines because they don't have a down payment, which is true. This program removes that barrier. To be eligible for this product, borrowers must be at or below 80% of the area median income for the address of the property they are buying, or one borrower is a first-time home buyer. The qualifying borrower would then be given 3% down payment assistance up to $15,000 in the form of a second lien. Okay? Borrowers will also have the flexibility to choose when and how often they want to make payments on the second lien, which must be paid in full by the end of the long term. And if the first lien is paid off, so that means if you refinance or you sell the property, you got to pay this back.
Right. Or you pay off your first loan. So after 30 years, people have asked me this too, especially when the Dream for All program came out. Well, what happens if we just stay here forever and whatnot? And if you stay there forever, that's great.
Balloon payment.
After 30 years, if you have paid it off, then you also have to pay off that second lien.
Yes. Again, people see the headlines 0% down and they reach out, and then they also keep reading. They're like, oh, there's no interest and no required monthly payment, which is good. It seems good, right? But you still have to pay that money back, and sometimes that could hurt a lot of people. They're getting ready to sell their home or refinance and take out cash or use the liquidity to do something with it, whether it's an emergency event or so, and then boom, they get hit with this. Oh yeah, you got to pay that second lien back, and they're like, what? So just be careful. Again, I'm not trying to bust this program. Just like my opinion on the Dream for All program, I think it's a great program to get people in the door. But the best way of owning a home is still the traditional route of saving up your own down payment and like at the minimum go through like FHA, or if you end up using a program like this or any other program with down payment assistance, just remember to try to refinance it into a traditional loan so that way you get the true benefit of home ownership, which is the equity building, you know, and the flexibility of if that emergency event does come up and you need to sell the home and get liquidity or refinance and cash out, you have that equity access and you don't have to owe anybody back.
Right, right. Chia, can you click on the additional details? I want to share with you guys a little bit more. So then in the Sacramento area, I want to show you what kind of income would qualify you for this program, okay? And this is the reason why it doesn't work in every single area, because we live in a state that is one of the most, if not the most expensive state.
Okay. Here's how it works. First lien mortgage meets LTV, loan to value. UWM provides a second lien mortgage for 3% of the purchase price, which is the down payment, up to $15,000. Okay, let's think about this. Okay, $15,000. All right.
So
up
that's
to,
if they're helping you with 3%, 15,000, 3% would be the maximum purchase price is 500,000.
500,000.
Which when Chia's done with this one, I'm going to show you on my chart what that looks like. Okay.
Okay, $500,000. So that means, okay, that means that the home that you're looking for has to be within that price point. Okay, if you're not planning on using any money at all. I don't know if they allow you to use money on top of it. Let's say a family goes, oh, 15,000. That's fine. I already got another 15,000. I'll add it with this, and now it's 30,000. Can they do that?
They can use that for whatchamacallit, the closing costs.
Okay, so they can't add their down payment they've been saving for 20 plus years with this.
Not that we're aware of. Okay. Again, this is a new program that ruled out and everything like that. Okay. They may change that and whatnot, but for what we understand so far, no, it can't be included in there.
Okay.
Because basically this program really is for people who don't have that. So if you're saying it's like, oh, I have it and everything like that, you probably don't want to use it. And we'll go ahead and talk about that a little bit more. You talked about building equity. So I'm going to talk about that a little bit more. So then, you guys can see that how it makes more sense.
Yes. And also remember, the property has to be in an area where it's below 80% of the median income. Okay, so remember that. And it has to meet the home possible guideline requirements. For very low income borrowers whose qualifying income is at or below 50%, they will receive a $2,500 credit as part of the 3%. Okay, part. This credit does not need to be repaid by the borrower and lowers their debt obligation from the second lien. Okay, that's pretty cool. 620 plus FICO and LTV must be equal to or greater than 95% LTV up to 97% LTV. Or at least one borrower must be a first-time home buyer and meet Home 1 and UWM's guidelines. Meaning first-time home buyer is defined as someone who has not had ownership interest in a home in the last 3 years. You can't own a home. 700 FICO score and LTV must be greater than 95% up to 97%. Our exclusive 0% down payment program is a powerful tool designed to benefit homeowner. Okay. All right. You ready to crunch those numbers and show everybody?
I am ready to crunch those numbers and show everybody. Okay. Give me just a moment. Let me move this on over here.
Yeah, so again, I don't want to bash on this program. It's a great program for those that's being introduced into home ownership because it is very difficult for them to get to save up the down payment, because that is very true. That is the hardest part and the number one barrier to people becoming homeowners. This eliminates that, yes. But once you get the home, I would suggest thinking about finding a way to exit this program ASAP and use that home ownership as an advantage to save more money so that you could eventually get out from this and start building equity right away. Okay, I see it. There it is. You might want to
Okay.
zoom in a little bit.
Okay.
A little bit more.
How's that looking, guys? Okay. Better?
Okay. Yeah.
We're good?
Yep.
Okay. Awesome. Okay, guys. All right. So earlier what I mentioned was let's just talk about our area, okay, to see whether or not it's doable, which means if they're gifting you that maximum 15% for the 3% down, that means the purchase
15,000.
price is 500,000, which is doable in our area, right, Chia? It's
It's
doable
doable.
in right. But here's the thing. If the income, okay, I'm going to remove this. If the income is 40, let's say $47 an hour, okay, which equates to roughly a little shy of 98,000, okay? This is, the debt to income ratio is still too high, okay? I wanted to show you guys that. So that means, let's just say it's 48 now, okay? 48, which means it's almost $100,000, okay, that you would have to have in order to be right there below that 50% debt to income ratio, okay? So not only do you have to have that, okay, you also have to have the income. Okay, it has to be less than 80%. Are you seeing this screen as well, Chia?
Yep. Yep.
Okay. So in Sacramento, I'm putting a Sacramento zip code here. Okay, guys? The 80% area median income is actually a little shy of 91,000. So in this situation, you'd get up to this, but do you really? Not really, because if you have the income to do this, and even though the interest rate is less than 7%, understand that these programs, the interest rate's going to be slightly higher, okay?
Yep.
And because of that, okay, you really technically can't take advantage of that really, which means, okay, if I plug this back in and we put that income, okay, again, it's 90,960. So if I'm putting 90,960 of income, okay, let's see what they truly qualify for, which means right here, you're right there on the cusp. Let's say we go up to 460. You're right there. So technically, this is what you would qualify for. This is what your monthly payment would look like, okay? And if you're stretching your dollar to 50%, think about it, guys, okay? If you are making, okay, this amount, okay, which means on a monthly basis, this is your gross income. If Uncle Sam is taking 25 to 30% of that, then plus now your monthly mortgage is this. Take a
Wait.
look at
Don't you
math.
need to adjust the interest rate for this program?
So I've adjusted it already. So right now, typical interest rate is a little shy of 7%. This one's going to be perfect credit, all other stuff. I'm saying it's roughly about 7.25. Okay. So this is the monthly payment for property tax, home insurance, mortgage insurance, the whole shebang. Okay. So going back on the math, okay, guys, in order to truly qualify for this and to meet all of the criteria as far as income, as far as the maximum debt to income ratio that you're allotted, that means your monthly gross income is roughly about 7580. Now, if I take 7580, okay, if I take that amount and I take 70%, this is your take home amount, okay? This is what you'd have after Uncle Sam takes a chunk of it.
How much is that? It's a
5,000,
little small.
5,306. Oh, sorry, guys. Let me do that again. Can you see that?
Yep.
Okay. In order to qualify in Sacramento County, this is the maximum income, household income that you're allowed to have. Okay. That means this is your monthly gross income. And if Uncle Sam is taking about 25 to 30%, I'm using 30% in this example, your take home is actually $5,306. Okay. So remember this number. Okay, guys, because if we go back to this is your monthly payment. So really, if I subtract this number, okay, to what you take home here.
She's doing her Excel magic. I have no idea what she's doing.
And I'm putting it on one area so that you can see it a little bit easier. Okay. Let's try that again. Taking this number minus this here. You got a little over $1,500 to work with on a monthly basis for food, for gas, for utilities, for whatever you need to do for your kids. Okay. So even still, okay, because this program is going to help you with that down payment, you're really only having to come out with 11,000. And if you work with Chia or someone as aggressive as Chia, you'll know that, hey, he's going to help you as much as possible with seller credits and whatnot. So it's very possible that you won't have to come out of pocket with anything. But at the end of the day, when you're looking at this program and you're not putting as much down, okay, this is all you have to work with. So you have to ask yourself, hey, this program is a great program, but does it fit my situation? Do I have enough to take care of my family at the end of the day if I'm not putting much in? And keep in mind, when we talk about equity building, as well, guys, okay, let's just say, for instance, the interest rate does fall. Okay, if the interest rate does fall and everything like that, and you haven't built up enough equity, even if the rates are very, very favorable, unless you're putting more money into that property in order for you to have at least 5% of equity to even refinance. And typically, in order for that to even make sense, you have to basically, the goal is to get rid of mortgage insurance to make your monthly payment lower. Now, if you don't have 20% of equity, it really sometimes doesn't make sense, even if the rates are lower for you to refinance. Okay, so you have to be in that perfect scenario for the program to work for you. How do you know that? You got to see all of your options. Talk to your loan officers if you're feeling, hey, I want to see what those numbers look like for me. Okay, let's crunch it out. Let's take a look. Let's plug in your income and everything like that to see whether or not this is a sensible situation for you. Otherwise, also take a look at the situation where, hey, well, in order for me to save up $15,000, this is what's going to take for me to do that. If you have at least, $500 saved up every single month, that's $6,000 within a year. If you're able to save 1,000, that's $12,000 a year. Is that more plausible? Is that if there's a possibility for that instead?
Yeah. Okay. There you
So
guys go. So, is it free money? Technically not, because you still have to pay it back. Yes, there is no interest accruing. There's no additional monthly payments that's being added to your mortgage. That's pretty cool. But in the moment the term is done, the 30 years is up, you fully paid it off, or you refinance or you sell, you're gonna have to pay that money back. Okay. I mean, I guess, comparing to the dream for all, at least you're not giving up that 20% of the equity. You're just paying what they gave you, which is up to that 3% or 15,000 that they give you. But remember the location. Okay, I think each location, the medium income is gonna change depending on
Exactly.
your home. So what does
Yeah.
that mean? That means that you're limited to what home you could buy. If you
Right.
wanted a different area that you've been setting your eye on for a long time, but the median income was just too low, but you make more, or vice versa, then you can't get that home, because everything has to still be within that criteria, the guidelines. Okay. So, I mean, if you could qualify for it and it introduces home ownership to you, that's great. Take advantage of it. But again, just remember in the back of your mind, come up with the exit strategy to where you could get out from it ASAP so that you could reap the benefits of true home ownership. The quicker you could do that, the better. So that way, you could just start taking advantage of it, because you just never know what life is going to throw at you. A lot of curveballs get thrown at homeowners, like we got property tax that's been going up every year because of the value of the market, and insurance, things like that. So that $1,000, that scenario that Lisa was going over, that budget that you have to play with now, that's gonna get eaten up quickly if you don't budget for that.
Right. And based on those numbers that I showed you, you guys are saying, many people are probably thinking, I was like, oh, okay, well, I may not be able to buy in Sacramento as well. I'll go ahead and go to Fresno. I have so many clients right now in Fresno, Visalia, and the Clovis area. And here's the thing. The medium income for Fresno is 67,000, not that 90,000 or close to 91,000 that we have in Sacramento. So it actually defaults them back to the maximum purchase price of 340. So it's not, when you're looking at these guidelines online, what they don't tell you, it's like, it's not one or the other, it's all of the criterias.
Yeah. Sorry, I kept interrupting. Did you guys hear the sound in the background? No?
Nope.
You guys didn't hear it? Okay, good. I thought that you guys heard. Okay. You guys ready for some reaction videos?
Yes.
Let's see what you got here.
This is Charles's favorite part. I shared this with you guys last week, so hopefully you guys got a chance to look at it.
I did see this one.
Common scam in Detroit is people will find a house that's for sale or a house that's for lease, whatever it is. They'll go to the house and they will bust open the lockbox. They'll steal the key. Once they have the key, they will advertise the house on Zillow or Facebook Marketplace. The person would show up for a showing to look at the house. The guy's got a key, unlocks the front door, walks through like he owns the place. You know, you wouldn't think anything's wrong with that. It must be his house, right? The person says, great, just give me a deposit, first month's rent, and I'll give you the key. And so now she's given this scammer $3,000-$4,000 and she doesn't have a house. And there's no hopes of getting that money back either, because the advertisements were probably posted under a fake account. The phone number or whatever that they used was likely a burner phone. So as soon as they got the money, they just threw it out. So there's no tracking this person down. There's no getting money from this person. A common
So, you know, this is so true. It happened a few years ago to some of my past clients. There were scammers putting homes on Zillow. And I don't know why Zillow don't up their security game on this, because anybody can list a property, you know that, on Zillow?
Yep.
And I don't know why they don't add like an extra step to verify, are you truly the owner of the property, or if you're an agent or somebody listing on behalf of a seller, like what are your credentials, whatever. Like they just need to up their game on verifying who it is, just for a precaution of something like this to avoid. And I had a client that reached out to me and said, Chia, I met up with the person at a property just like this, and they showed me the house, they gave me the keys, but the crazy thing is they never showed up in person, so I don't even know who it is. They just gave me the code to a lockbox. I got in, toured the house, I liked it, but I already gave them a deposit and everything. I was excited. They told me I was approved after taking my application fee. And then I never heard from them again. You know, so this is even worse because of like companies like Open Door too. You know why?
Yeah.
Open Door is self-tour homes, and their homes are vacant 100% of the time. So anybody that has a smart home app, that they could just register and say, hey, I'm a buyer, and they use your GPS tracker to track you if you're close to that home, and then you just click on unlock and it unlocks a home for you. Or you could just make an appointment on Open Door app and say, I'm going to go look at the home at 6 a.m. And then they send you a code right before that, but then instead of you opening it, you give the code to the tenant and say, hey, look, here's a code. Since our appointment is at 6 a.m., you can go view it, just enter this code, and then you can go look at the house. They go look at the house, and then they're like, oh, yeah, I like it. And then they pay for the deposit. They send a Venmo, a Zelle, or a Wire, or whatever. And then that person changes their number, and they're gone.
Yeah. Then use a burner phone.
Yeah,
And
or they use a Google Voice number.
Yeah, this is such a bad thing because it makes our industry look so bad, especially for us lenders, right? Who we do have to take social security numbers and date of birth and things like that in order to complete the loan process application. And this is the perfect reason why people are so hesitant to do that. And I don't blame the unbeknownst consumer at all. And like you said, Chia, this could be absolutely avoided if Zillow just put some precautions and say that, hey, unless you're licensed and we can track you and everything like that for the security of our consumers, if I were in these people's shoes, I wouldn't try to go after the person that's trying to scam, I'd sue Zillow. I was like,
Or
hey,
Zillow.
based on your situation, based on my trust in your website, okay,
Mhm.
I put myself out there, and they should be able to say that. They should be able to, if Zillow's going to be a reputable company, right, and that's subjective, right? Should I say that lightly? Then to protect the consumer, that's all they had to do.
Yep. And so it's not just a common scam in Detroit.
It's a common
It's
sense everywhere.
it's everywhere. And another scam too is this. Even property managers, it's sad, not all, but even some property managers out there are scamming tenants. And you know what they're doing? They're taking application fees even though the home is already like gone.
Mm-hmm.
So even though the home already has a promised tenant to move in, they're still taking applications for that home that they're marketing, and it's a non-refundable application fee, and it
Yeah,
could
I
be
mean,
$100 per
it
person.
appalls me. It appalls me how people can make a business taking advantage of other people. At the same time, we can't be naive enough to say that no, everybody, it doesn't really happen all that often. It does, guys. Okay, especially now that the law is changing, where that the whole situation with the buyer agent and a lot of people are going directly to the listing agent, yada yada yada. And because of Open Door and because of a lot of companies that allow for you to come in to see the property without actually having any type of real live representation, that's scary. I don't recommend it. Okay. And as a consumer, I would say, hey, don't try to save money by not having representation. It's like going into court without having representation. And
Yeah,
this
you're
is
gonna get burned one way or the other, whether it's right now or whether it's a couple of years from now. Like
right.
something's gonna happen just because you didn't get full disclosure, you didn't have anybody like that had your back, that educated you, that disclosed things for you, that helped you discover things that the other party
Mhm.
was hiding, things like that. So there's a lot that could happen. So like yeah, I feel for the people that fell victim to this scam, but it is still ongoing today. Okay,
Right.
it is still ongoing. And here's kind of like some tips. Okay, if you have a home that is for sale and it's vacant, put alarm system in there. They nowadays there's a lot of companies out there that will give you like a temporary internet and a temporary security where you don't have to sign a contract and it's just month by month and it's fairly affordable to do what you needed to do. If you can't afford that, find a house sitter somehow, some way that comes and stay at it before it gets dark and it just leaves right when daylight comes. Three, if you notice that you're doing a walkthrough on your property on a daily just to check in because it's vacant or weekly, if you notice that your sign, the for sale sign, has been taken down, that's normally a sign, okay? Because what they do is they would first take your sign down because they know that it's vacant and they're going to check. They're going to check to see if you come back and install it. If you don't install it after a week, they take they hide it now. They hide your whole sign and put it in the backyard. They wait another week. If you don't go back and find it and reinstall it, they break in now. That's when they break in, they put a homeless or a squatter, somebody in there with a fake lease, fake furniture, makes it look like they all moved in, and they do it all in one night. These guys got like a organized scam going on. They know what
Yep.
they're doing. They're targeting vacant homes. Okay. And I hate to say this, but a lot of open door listings fall victim to this because a lot of their home, anybody can get in.
Right. Right.
Anybody can
And
get
it's
in. So
yeah.
it happens a lot. That's why
Mhm.
sometimes when you go see a lot of these homes that fall victim to this, the door jamb is all jacked up. Um, they break the striking plate from the front door because it's only held by those half-inch screws, and and then everything is all like just damaged or trash. Because You know, everything is crazy right now in the States, you know. So like everybody's trying to find a way to cheat the system. And squatting right now is just still one of those scams that's going on right now for homeowners.
Right.
So yeah. Okay,
One of
so
the things that you just really have to think about when you're doing any of this stuff, if it sounds too good to be true, don't ignore your head. When
Yeah.
it seems like it's not right, or if it seems like, that deal, it's way too good to be true. I mean, how often is it really like if you're vetting a real property management company that's been in business for a while, it's not very often that anybody's just going to let you go into a home with just, oh, let me give you the lockbox. Let me just let you go in on your own, right? If the open door stuff, I mean, they do have some fail safes in place. I mean, they're supposed to have, cameras and security systems, and it's all supposed to be internet based and everything. So they do what they do, and they take that risk. But in most cases, if you're going to go rent a home or if you're going to go tour a home, if somebody just offers you a lockbox code and says, go ahead and let yourself in, that's not really normal. And you got to use your common sense and say, okay, well, maybe this person's just a little strange or whatever it is. And then don't give any kind of money, don't give any kind of information without vetting who you're dealing with, because
Right.
you're just asking for problems. You got to use that common sense when you're doing this. Don't just be in love with the house and just be like, oh my goodness, this is perfect for us and all these things and say, well, yeah, it's fine, it's whatever. You're gonna get burned. You're gonna get burned, and just think about that just in life in general. Most of the time, if it's too good to be true, it most likely is. You don't get things for free. That's just not how things work, right? So yeah.
all right, let's react to one more video because it's getting close, okay, to an hour.
Property taxes are a subscription service. You're paying a subscription service fee in exchange for this whole kind of AAA package. As long as you consider that relationship to be beneficial, then it's a binding contract. It's completely subjective. So if they assume that you believe that it's consideration and you never directly and specifically and explicitly unemotionally tell them that I no longer consider these things to be consideration, this whole thing goes bye-bye. Now, at that point, if they force you to continue the contract after that point, now we are involved in an involuntary servitude, which is up to 25 years in prison.
Wow.
It is just a subscription service, and you're just paying for a subscription service, just like Netflix.
I don't know about that.
To be beneficial.
This is the property tax.
Yeah.
So I tried to look this up, guys. I could not find it anywhere. So I can't verify that.
I would take this information from this guru with a big grain of salt, okay? Because I mean, unless you're bored and you just want to spice things up in your life, you want to try to cancel your subscription plan with the government, I mean, by all means, more power to you. You know what I mean? Like maybe you have one of those Rocket Mortgage apps to where they cancel subscriptions on your behalf.
Mm-hmm.
Ask them to see if they can cancel your property taxes for you. Oh man, don't do this, you guys. I don't know why. I don't know why this information would be out there like this. Like I'm
It's
curious to see.
crazy.
I have bought a property at a tax auction. The previous owners got nothing. It doesn't matter whether they thought it was a subscription or not. I got nothing. I own the property now. Believe this guy if you don't really want to own your property anymore.
Yeah, pretty much.
I want to see that argument in court. Property taxes, rent, call it what it is.
The people versus Uncle Sam, right?
Dude, that is so funny. One has to weigh if it's worth having to privately contact for county services, fire, garbage, plowing. Additional way to assert more private property is through a additional allodial title for your land, which even insures against eminent domain claims. Okay, I haven't heard that. Keep in mind that you can also choose the amount of this subscription by carefully selecting the location, size, value of your property.
That's clever.
Woo! Dude, this is hilarious, y'all.
Subscription like Netflix. Okay. All right.
I'm telling you, they're just trying to find catchy titles to get clout.
They really
And
are.
you know what? I have to wonder either if this guy's ever owned a property before. How Uncle Sam can foreclose on your property way faster. And the first comment says that, hey, he bought a house over auction because somebody didn't pay their property tax. All he had to do was pay his property tax
Yeah.
to own that house. He didn't even need to pay the mortgage, right?
Yeah.
So I was like, okay, if that guy really did do that, I'd go after his property because, you probably purchased that.
Okay, we're not condoning to any of these things, okay? We're just trying to entertain y'all now. Okay, don't do anything we're saying here now. Don't try to go and look this guy up, see how many property he hasn't paid tax on. Oh man. Okay, one more. Look, I'm pretty right wing, but I still like living in civilization rather than pretending that I'm some Randian Superman. Pay your damn taxes, get your garbage collected right to your rep if it isn't. Not everything is a contract. Yeah. See, sometimes people will come across a video like this and they would be like, oh shoot, I just found a way to save a bunch of money on my monthly payments. I'm gonna stop
Yeah.
paying property taxes. No, please don't do that. You guys are just gonna be in for a big can of worms if you guys enter into that and you guys open up that gate. Yeah, I don't know what this guy was thinking when he made this video. This is crazy. And you can see this guy listening to him while he's talking the whole time, right? And then he's just like, sure. He's looking. He's like, oh my gosh, this is crazy. Okay, it's over an hour. Hopefully, you guys had fun. I had fun. Crazy stuff. You just never know what you're gonna come across on social media. People just are definitely struggling to chase that clout. It's the struggle is real, Hans Charles.
Whatever they can get to come up with that stuff.
Whatever title they can make up, and if they could just commit and show compassion enough and just be super confident in their speech and script, they're gonna get somebody to believe. And I guarantee you, somebody desperate enough is gonna see that video and they're gonna probably act on it and it's gonna affect them. So all right, you guys, I'm gonna end with that. Thank you guys for tuning in. Let us know what you guys want to react to next time. But other than that, we're gonna let you guys go. So peace out.